When it comes to car insurance, it's good to be able to review exactly what coverage you have. A lot of you may not realize it, but your deductibles may be relatively low in the form of maybe a $250 deductible or a $500 deductible. If you look at your car insurance policy and maybe you do need some relief, then I would consider raising your deductible first before canceling your policy. And the reason for that is pretty simple. If you were in an accident, you have to ask yourself, what amount of money would it take for me to actually file this claim? Because for so many car insurance providers, once you file a claim, there is a chance that your premiums could increase. And so when I ask this question of clients, a lot of times they'll tell me, oh, well, maybe $500 would be the tipping point, or $750 or $1,000. So take a look at what that is for yourself. It may be possible that you can raise your deductible by a little bit, and as a result, increase the savings that you would get from a change in your premium amounts. Maybe perhaps instead of paying $1,200 a year, you now only have to pay $1,000 a year. Therefore, you get a $200 savings as a result of raising that deductible. And that $200 savings could be really beneficial and valuable for you right now. So looking at your deductibles is a good place to look first before canceling any policies. Another area for you to consider, though, is to make sure that your liability limits are appropriate. This is not only important now, but it's important in general. We do have a Financial Foundations online course that we're going to be releasing shortly that will dive into some of these specifics as they relate to just normal everyday building of your financial foundation. So we're not going to go into it right now, but it is something that I want to plant a seed for you to consider as we move forward. Now, we talked about car insurance. The same thing can really be applicable to homeowners insurance. Look at your deductibles. Is there something that you can do there to maybe raise that deductible to incur a savings, something that you may be able to save right now in the form of a change in premium? These are little moves, but when combined together can produce some real value for you. So there's some great places to look that aren't typically on the forefront of our mind in a situation like this. Now, let's take a look at protection elements that talk about protecting your income. Now, I want to let you know that income replacement is so critically important because, after all, your ability to earn income is the greatest asset that you have. And so if you are concerned about a disability, and we have been getting a lot of questions about this issue, I'm going to suggest that you look at what you might have available to you right now. If you work for someone else, it's very possible that you have disability coverage through your employer, whether it be something that you've elected to be a part of or whether it's something that's automatically given to you is really up to the company in which you work for. So if you work for somebody else, I would encourage you to look into your benefits and see what is available. If you don't have a benefit booklet or you don't have some sort of online resource, then reach out to your HR department or your benefits department at where you are employed and ask them for details about disability coverage. And there's two forms of disability that I want you to be mindful of. There's short-term disability and long-term disability. Most employers will offer long-term disability, which means that you have to be classified as disabled, and that disability is likely going to be lasting for a certain period of time, a year, 2 years, and so forth. The ironic thing about long-term disability, though, is that typically you have to go through a waiting period before you can access some of those benefits. So if you're concerned about being disabled as a result of this virus, then long-term disability may not even be something that you can tap into unless, unfortunately, you are disabled and it looks like that disability is going to last for a significant period of time. Regardless, it's important for you to know what your benefits are and under what terms you can collect on those benefits. What is the waiting period that you have to go through before you can file and collect on disability benefits? How long will those disability benefits last? And what qualifies you to be considered disabled? The definition of disability in this case is critically important. A lot of disability policies will state that you can collect disability if you are totally and permanently disabled, which means that you are unable to work anywhere in the U.S. economy. that's a pretty big total disability. However, there are some disability policies that allow you to be able to collect benefits if you're unable to work in the profession and in the occupation for which you are trained and skilled. Understanding that definition of disability will be important for you to identify so that you can know under what terms you might be able to collect benefits. And then finally, you want to know how long those benefits are expected to be paid. Are they going to be paid for 2 years, 5 years, until age 65, or a lifetime? These are all things for you to be thinking about and asking questions about as you're looking for your long-term disability benefits. And finally, one thing to be thinking about is whether or not those benefits, when they come to you, will be taxable or not. If you've paid for disability coverage out of your paycheck, and if that payment was made before taxes were taken out, then when you receive benefits, you'll be expected to pay taxes on those benefits. Whereas if you paid for disability coverage after you paid taxes, then those benefits would come to you without you having to pay additional tax on those benefits. This is a great reason why you should be having a financial advocate, because they can really help navigate what the rules are in this situation. But regardless, your benefits person at where you are employed should be able to answer many, if not all, of these questions. Taking a few minutes to figure out what you have is going to help you feel a lot more secure going forward. Now, there is another type of disability that I want you to keep in mind, and that is short-term disability. And short-term disability is just that. It's designed to be able to replace your income over a short period of time, like up to a year. Many companies don't offer short-term disability. However, we are finding that companies are starting to recognize that perhaps that's something they want to start including in on their benefits. It is important for you to reach out to your company to find if short-term disability is available to you so that you know whether or not it's going to be something you can access if you need it. Also keep in mind that regardless of whether your disability benefits are short-term or long-term, that they're not going to replace your entire income. Typically, a lot of disability policies will only cover up to 60% of whatever it is you earn. They don't always cover commissions and bonuses or even retirement contributions. So getting a full understanding about what your benefits are is going to be important as you start to see what that money might be coming to you and when you might be able to access it. Asking questions is well within your right. You are your own best advocate right now. So reach out, figure out what you have. Don't be afraid to ask questions and get clarity on anything that doesn't feel right or doesn't seem to be explained in a way that you fully understand. Now let's talk a little bit about health insurance. Right now, we all need health insurance more now than ever before. And so it's important to understand what your benefits are as it relates to health insurance as well. A lot of times companies will offer high deductible plans. And if your company offers that, there is a possibility that you could have money in your health savings account. Because typically when you have a high deductible plan, you also have the ability to have a health savings account so that you can put money aside before taxes come out of that money. And that money can be spent on co-payments, deductibles, and some medications, and anything that may not be an elective surgery. There are qualified medical expenses for which you can use your health savings account to pay for. If you have a health savings account through your work, you want to find out how much money is there, because right now you may find that you need to get access to medical care, and perhaps your health savings account is the place in which you need to use that money to spend on that health care. Finding out what your health insurance covers and doesn't cover is going to be important right now. The good news is that we find that many people have adequately funded their health savings accounts. If you are not doing that, I would highly recommend that going forward, you fund that fully so that you have the money if you need it. The good news about a health savings account is it's different than a flexible savings account, which we'll talk about in just a minute. A health savings account is something that you can roll over year after year after year. So if you don't use all the money this year on medical expenses, that money rolls into next year, and so forth and so forth. So that when you get to retirement, you may have quite a bit of money that you can then use for qualified medical expenses or even long-term care premiums. So it's always a really good idea to adequately fund your health savings account if that's something that's available to you. Your company might have a different plan that's not a high deductible plan, more of a HMO or PPO or something that's a derivative thereof. And in which case you might have a flexible savings account, which is similar to a health savings account. It allows you to be able to have access to money to be able to be spent on medicines that you might need or anything that might not be covered through your insurance. However, the one caveat to a flexible savings account is it is a use it or lose it account, meaning that whatever money is in there needs to be used within that year or you lose it. It doesn't roll over year after year. Knowing what you have is going to be powerful information for you so that you can know how and when and under what circumstances it can be used. Looking up to see what qualifies as a qualified medical expense is also important. We're going to be listing some links for you to be able to read more about a qualified medical expense in our resources section, but it is something that I think is very worthwhile for you to take a minute and read through so that you know what you can spend money on and what you can't spend money on. It's better to know now than get into a situation where you need to spend the money and you're not certain. So take a few minutes, add that to your to-do list, figuring out what are my health benefits, under what circumstances can I use it, or if there's benefits that are not available to me at this time, how do these benefits cover a pandemic? How do these benefits cover any costs related to the coronavirus? And what do I have in the form of a health savings account or a flexible savings account? And how can I access that money if I need to do that? This is the time to really get clear about the protection elements that you have, and that starts with asking great questions. Again, reach out to your benefits department, understand what you have. Now, you may be watching this and you may be thinking, hey, this all sounds well and good, but I'm a freelancer and I don't have a company that's providing me disability benefits or even health insurance, perhaps. And so there are some things that you can be thinking about. First of all, I would definitely add this to your to-do list if you are a freelancer, because if you're unable to work due to a disability or illness, then that income essentially dries up. So you want to have some business continuation planning that's done for you in the event that you can't work. Now, let's talk about right now, because this is what we're in the middle of. If you don't have these benefits available to you, you can look to see whether or not you might qualify for Social Security disability. I'm going to tell you it's really tough to qualify though, and it does depend on what other income you have coming in and what form of disability you have. You have to be considered totally and permanently disabled, which means is that your illness is expected to last for a long period of time and typically would result in death. And so qualifying for this benefit is going to be hard, and there is a time period and there is a lot of paperwork. However, it is important for you to know what that resource is and whether or not you might qualify. We're going to put a link to the Social Security Administration in our resources section. You can go there and start to look around to get more information about Social Security disability to see what the parameters are and what you need to know about whether or not you would qualify. Now, let's talk about protection elements as it relates to life or life events. And here we're going to talk about documents and things that you may need, as well as life insurance. Let's talk about documents first. First and foremost, if you don't have a will, now's the time to do one. We certainly don't want to think about anything drastically happening to us right now, but it is important that you indicate what your wishes are through a will so that you get to determine what happens rather than your state. So if you don't have a will, now would be a great time to get one. And there are a lot of resources online that you can do a very simple will without you having to go out and speak to an attorney. However, if you do have a complicated situation and you don't have a will right now, and you have children, or maybe you are in a relationship where there was children from a previous marriage or relationship involved, or you have a lot of assets, then having an attorney be involved in this process would certainly be something I would recommend. Regardless, having a will right now is going to be critically important. Some things to consider when you're going out and you're drafting a will or you're speaking to an attorney about a will. You want to talk to them about the importance of having guardians listed if you have minor children. And if you do have guardians listed for those minor children, you want to also include alternative guardians in the event that the primary guardian that you choose is unable to be able to care for your children. In addition, you might want to think about what funding might be available to that guardian so that they have the resources to be able to care for your children the way that you would want them to be cared for if you were alive. These are all really important questions and questions that should be discussed with a qualified attorney in terms of you drafting the will for yourself and your family. Something else to consider when thinking about a will is that some assets don't go through a will. And you might be thinking, what in the world does that mean? Well, it means that some assets operate under operation of law, which means is they bypass a will. For example, if you have life insurance and you have a beneficiary on your life insurance, then in the event that you die, that money goes directly to that beneficiary. So if that beneficiary that you have stated in your life insurance policy is different than whatever statement that you had in your will related to that life insurance, the beneficiary that you chose within your life insurance is going to supersede whatever you wrote in your will. So this is a really great time to make sure that the beneficiaries that you have on your life insurance policy are the beneficiaries that you have related to retirement plans, is the person that you would want to receive those benefits in the event that something happens to you. You want to make sure that they are aligned with what you state in your will so that there is no confusion and no arguments that might occur after the fact. Going through and looking at that is really important right now. Sometimes we go through life and we make decisions and then we don't go back and look at the decisions that we made. But now's the time to do that, to making sure that the beneficiaries that you chose years ago still are applicable to your situation today. Making sure that they are stated correctly in those different assets such as life insurance and retirement plans, and that they're also the same things as you've stated in your will. That's really important for you to do right now. In the event that the change needs to be made, there's a couple of things that you can do. First of all, with the assets such as life insurance or retirement plans, you would need to reach out to your life insurance company to change that beneficiary, and you would need to be reaching out to your retirement plan coordinator to change any beneficiary as it relates to your retirement plans. In addition, you may want to reach out to your attorney and make adjustments in your will so that everything is aligned. Taking some time to go through these documents while we're at home and while we have the ability to do that is going to be super important as you go forward. Now that we've talked about wills, let's talk about some of the other documents that you might need. We're not going to dive into trust documents during this video series. We will dive into that a little bit more during our Financial Foundations online course that's more general in nature. But for our purposes today, I do want to focus on some other types of documents for you to consider having if you don't already have them in place. The first is a living will. A living will is a document that really states how you want yourself to be treated if you are permanently unconscious or dying. It outlines what measures need to be taken on your behalf and on what care you wish to have or not have. This is really important. And I know it's extremely scary and uncomfortable to be thinking about this, much less drafting documents that kind of outline these specific decisions for us right now. But it is critical so that your family and the caregivers that you're going to be interacting with or that you could potentially be interacting with will know what your wishes are. Right now, our healthcare profession is being stretched to the max, and there's going to be a lot that's asked of them. And they have certain laws and rules they have to operate inside of. And so having your wishes outlined will help them to be able to give you the care or to not give you the care that you want in this difficult time. It's also important that your family understands what your wishes are so that they're not having to make decisions when they might be uncertain or when they're in the middle of, a crisis themselves and having to deal with the circumstances that they find themselves in. So a living will can really outline what measures you want to be taken on your behalf and what care you may or may not want to undergo at this critical time. It's also important to have a healthcare proxy. A healthcare proxy is a person that you have selected to be able to make decisions on your behalf. Typically, when you have a healthcare proxy, you have it in conjunction with a durable power of attorney for healthcare, which is the document that states who your healthcare proxy is. The healthcare proxy is someone that you trust to be able to make decisions, someone that you know will carry forward the decisions that you have set forth, and that will help abide by the living will and the statements that you make inside of that living will. And then finally, you may want to consider having a do not resuscitate order. In many cases, a hospital will ask you to complete that upon arrival and checking in. But in this stage that we're in, where so many people are coming in all at one time, sometimes these things can be overlooked. So if you do have specifics around whether or not you want to have a DNR, a do not resuscitate order or not, now's the time to go ahead and indicate those and have that document on hand as well. There are a lot of places where you can download a template for a living will or a healthcare proxy, and certainly you can reach out to your attorney for advice on that as well. But regardless, this is a really good time to be able to have those documents in place if you don't already have them. Again, I know this is an uncomfortable conversation to have and an uncomfortable thing for you to be thinking about, but your wishes are important. And to ease the peace of mind of those that love you and those that are around you will give a lot of weight towards you're feeling more secure as you go through this process. And remember, whatever you decide is perfectly your choice. But communicating that to family and friends and loved ones is also important. So if you haven't had conversations around this issue, it may be a good time to do that now. Let's take a few minutes and talk about life insurance. If you already have life insurance in place, congratulations. The good news is that in talking with many life insurance carriers, a pandemic is automatically covered under any existing policy you already have. However, I am hearing from a lot of life insurance companies about an increase in people trying to apply for life insurance. And that's perfectly normal. I think all of us are scared and worried and want to make sure that our families are taken care of. And so if you are considering buying life insurance at this moment, I want to give you a couple of things to be thinking about. Number one is that you want to make sure that if you are acquiring coverage, that in the event that you were to die during this pandemic, that those life insurance benefits would come through. I don't see any reason why people would be excluding that, but it's still something that you want to check out with whoever the company is that you're choosing to acquire that policy from. It's really also important to be working through an agent if you can, rather than buying online. I know there's a lot of online resources out there where people can buy life insurance, but having somebody to talk to during this time can be really, really valuable, especially in determining not only how much of life insurance you should get, but what the coverages are, is there any caveats to that, and the cost of that insurance. And they can also help you to write up and think about who the beneficiaries are and think about the terms under which the policy might be paid out. All of those things are really critically important and something that a great financial advocate or a super insurance agent should be able to help you out with. You know, we talk about making sure that you secure your insurability early. It's one of the things that I try to talk about frequently and often as I'm giving financial suggestions out there to the myWorth community. And this is a great example of why. Having life insurance in place, securing that insurability allows you a peace of mind to know that your family is going to be okay in the event that something catastrophic were to happen to you. In thinking about buying life insurance, if you are panic buying at the moment, you also want to think about where does this fit into your overall financial plan. I think life insurance is an important part of everyone's financial plan, but you don't want to buy now and then as soon as this goes away, that now you say, I don't need it anymore, and you decide you're going to not pay it anymore. This should be a part of a larger conversation and one that you carefully consider given the replacement of your income, given the other assets that you have, and given your ability to earn income. Remember, a lot of times people will say, oh, you don't want to be overinsured. And the reality is you cannot be overinsured. And the reason for that is that no insurance company is going to give you insurance more than what your economic value is. They don't want you to be worth more dead than alive. So the underwriting process in and of itself through life insurance companies really prevents you from being overinsured. If anything, we find that most people are underinsured. So if life insurance is not something that you have considered or not something that you thought that you wanted or needed, now's a great time to revisit that conversation. Again, this is an important conversation for you to have with your family, with yourself, and certainly with an insurance professional or a financial advocate. If you have questions specifically about life insurance, we also at myWorth are happy to answer any questions that you may have. I recommend getting the amount of insurance that would fully replace your economic life value. So if you think about what you're earning year after year, and you think about the time left you have to work, a quick and easy number is to multiply your annual earnings by the number of years you have left to work. So for example, if you are in your 40s, maybe you multiply your earnings by 10 to 15 times. If you're younger, it could be as high as 30 or even 35 to 40 times what you're earning each and every year. This ensures that your income will be fully replaced in the event that something happens to you. Regardless, it is important for you to consider this and also to consider one thing that many people may be forgetting during this time in regards to life insurance, and that is adding on a disability waiver of premium. I'll speak on my own behalf. I have a lot of life insurance. I believe in life insurance and have been purchasing life insurance since I was in my early 20s. And I have a waiver of premium on my life insurance, which basically states that if I am disabled, those premiums will be paid on my behalf. And so there's an additional comfort level that I have knowing that that life insurance is going to remain in place regardless of whether I am able to pay for it due to a disability or not. So that may be something that you want to consider if you haven't bought life insurance yet and are thinking about making that purchase up and coming. Regardless, life insurance should be an important part of a conversation, not just today, but in the future. And I encourage you to have that conversation as soon as you feel comfortable in doing so. So we've talked about a lot of things as it relates to protection. We talked about car and homeowners insurance, things that protect your assets. We talked about disability, health insurance. We didn't really touch on long-term care, although that is an important part of protection. We talked about Social Security disability, and we talked about wills and documents such as your advanced directives, like your living will, your healthcare proxy, and your do not resuscitate order. And we finished up with a conversation around life insurance. I feel very strongly that when you're looking at a comprehensive financial plan, that protection should come first. And the reason for that is simple. You can't go back and fix a mistake in protection after the fact. So if protection is something that maybe you haven't addressed because you either thought you didn't need it or it was something that you could deal with later on, now is a really good time to go and revisit that conversation, to look and see what things in protection you need to adjust, modify, replace, or implement for your plan.